Good evening, ladies and gentlemen. This is Cluelessly Trading Frank. It's approximately 8:07 p.m. on a rather chilly evening here on the New Jersey-New York waterfront, overlooking lovely Statue of Liberty, Lady Liberty. And it is November 8th, 2018. Full disclosure, this is purely for financial education, not for solicitation or advice. These sessions are recorded, uploaded to the Cluelessly Trading YouTube channel for viewing by anyone who has an internet connection. And of course, do spread the word around, because I notice we do get a lot of outside traffic come in and check out the videos, and some of them who might be interested can join us. It's one way of spreading the word, but it's a valuable resource, and you yourself can sometimes, if you're really bored out of your mind and want to remember something, go back and review a video cast, because I don't do video blog. I do video blogs. We call them video casts on a particular time period, from a month ago or so. So you just want to refresh your memory and hear what was going on then and what we did. So it's valuable resource, and it's always there. On that note, let us begin. I'm going to try to keep it as to the point as possible without rambling on much. And let me start. So a couple of broad points. We have had a ferocious rebound. Nothing new. I will take full credit for once, not just for once, but anyway, with all humility, I will take full credit that everything that I mentioned to you, all my members and traders, a couple of weeks ago, in the midst, or even a week ago, in the midst of the carnage, has come true. It's the nature of the beast when you focus primarily on technicals, because these are extremely, completely, 110%, 100% almost, computer-controlled, robotic, high-frequency trading, algorithmic, high-frequency trading markets. It's a fact. There's no running away from it. And people who are disbelievers have slowly but surely, they've seen it repeatedly so many times. There's really nothing new to it. Now, exactly at what point they will do what they do, that's the hard part. But the time frame is generally very quick. As you can clearly see, it's a matter of a couple of days, if not a week or so, when the world just turns. And it's just the way it happens. It's getting faster and faster. You can see that on our daily trading. The machines move faster and faster. And when we get vicious climactic drops, couple of thousand points, 9-12% on the major indices is not a joke, regardless of what the reasons are. Remember that. Regardless of what the reasons are, they will always inevitably have a reflex bounce. As you might have heard, some of you, that the most vicious bounces, and bounces mean money to us, right? We are, after all, tactical traders. So whichever the bounce is, up or down, if we catch the right wave, you make a lot of money. So in a way, we're somewhat market neutral with a long-sided bias. We tend to make more money on the long side and some money on the short side. But saying all that, the fact remains that the most vicious bounces in the financial markets, and I can only talk about the U.S. financial markets, that's where I, live and breathe in and have been for years. The most vicious and aggressive bounces, where the most money can be made, are always in the midst of a big correction. Under normal circumstances, where the market's kind of going sideways, everyone's kind of ho-hum, no one's really scared or excited. Everyone's just kind of, okay, the market's slowly going higher. You never get 700, 500, 600 point moves up or down. And let's talk about the bounces, the reflex bounce that we're going through. So when these type of bounces happen, you have to be ready. You have to act on the moment. Sometimes you have to hold the swings for a couple of days, close your eyes to the intraday vacillations and volatility, and you reach that exact point that the charts have shown all the way from down here, which was not too long ago, which was the 29th of October. So 1, 2, these were the three marching soldiers that I talked about, and that was the first tell. This was the first tell that the market was going to go higher. By the time the second candle appeared right there, this is obviously a 2018 chart that big marker there. So by the time the second candle appeared, it was pretty much a given that the markets were going to rally to a certain level. Because by that time, Again, I repeat over and over again, you do not need to be a rocket scientist in this game. The biggest impediment to this game, which I always talk about, and I mean it, because it happens to me too at certain times. It happens to me a lot less, but I'm human after all, and we're dealing with real money. And the bigger the amount of money that you're dealing with, the more cautious and scared you naturally are. Because smaller amounts of money that you're dealing with, even if it completely blows up, you're not going to be on the street. But if you're dealing with some big money trades, multiple trades, let's say, not only it's a matter of not feeling good, it's a matter of material impact, which has some mental consequences. Simple English. The bigger the money, the bigger the losses, if you're not handling it right. So bottom line is that by the time the second candle appeared and all this double bottom stochastics, I kept on going in. It's almost, I'm like a broken record, right? But it takes time, because my goal is not to just produce alerts. And I've said this to everybody who has joined my service. You get a comprehensive idea of the realities of the market. You get a really good understanding about the real dynamics of money management, how Wall Street works, because that's really where my lineage comes from. And I share that knowledge freely with you guys, and you get a much more rounded view. So you're not just a quick trader just scalping for $1 here and there. You get a much better understanding where you may go for the big kill, the big whale, as I like to call it. So saying all that, so I sound like a broken record because these things I've repeated over and over again. And I know it takes time for a lot of people who are kind of newer to the markets or newer to this type of market to really accept the truth and the facts that without these tactical charts, you ain't going anywhere. And they're very accurate. If I wasn't accurate, well, okay. I could be slapped around and said, nah, you're wrong most of the time. You know, what are you talking about? I'm right a lot. Now, I'm not saying that with some sort of being, bragging about this. I'm just stating some facts here. I'm right a lot. I am wrong sometimes, but not wrong in a big way. Sometimes the market forces you to wrong in a big way when these type of things happen very suddenly. So you adapt. Black swan events are known as unquantifiable events, right? That you can quantify them. So if you can't quantify them, so how do you forecast them? So those are black swan events. That's a different story. But saying all that, let me stick to the facts here, that by the time that the third candle appeared, it was pretty much a given, and it was supported by your underlying stochastics. And this is the same with stocks too. You know that. I rely on these basic indicators, and I rely on about 28 others. I follow about 30 to 32 indicators. I show about 4 to 6 at any given time. And this is one of the most effective ones that I use, because it doesn't require a lot of brain power to look at it visually and say, okay, it's a double bottom. It's a crossover up. It's following, the candles are following this. The Kopak curve, which I explained in one of my earlier videos, and certainly look it up, is a more of a directional swing indicator. So when some people come and say, I really can't watch the markets during the day, I say it doesn't really matter. If you truly want to buy something and hold it, maybe add to it during the day when we get these intraday structured pullbacks, markets down 5, 6, 7, 8, 9, 10 S&P points, then that's fine. Otherwise, you buy some here, you look at this couple of times a day or maybe end of the day, and as long as it's cooperating, you just hold it. So there's no excuse to the fact that, oh, I can't watch the market during the day. So it doesn't matter, because the swing trades of people who bought here, and I know many traders who are not necessarily in the chat room who have done that, and they've been with me and they know what they're doing. And it's not that they know what they're doing, but they basically follow a certain discipline. So they buy around this level, they buy the second candle, and they just hold it. This is cooperating. So what rush do they have? It doesn't mean that they're going to be, if they bought it down here, which some of them did, and they bought it here, then during the day, there's a lot of volatility. So they're not like monkeys on a hot tin roof like many of us are. I'm sometimes like a monkey on a hot tin roof because I'm looking at a thing on a microscopic basis. Many traders in our group, they are just crazy. They're like MOC. They're monkeys on crack. All right? And you don't want to see a monkey on crack. I don't want to see a monkey on crack, okay? So bottom line is that they're just jumping on everything. Like, oh my God, look at this, here we come. Because one sell program came in on a 15-minute candle. So what? But I'm not here to change people's personalities. It's completely up to them what they want to do. So, but the reality is that you buy it here, so you don't watch every little tick, every little 15 minutes. Maybe you look at the market every couple of hours. You follow the tweets that I'm putting out through. Unless I'm saying there's a major directional bias change, you stick with it. These things are cooperating because I show these charts on a real-time basis, as you all know, and you stick with it. So a $2, $3, $4 call bought here on the indices, whether it be the SPY or the SPX, which are a little bit pricier, but let me just give you a hypothetical example. At this point, will be around 20. Okay? So you made yourself a good, solid 5 to 800% on your money because it hit exactly the level which I said it was going to hit. Not to say that I knew exactly it was going to do that within this short period of time. I did expect that move. And keep in mind that if you look at this, and this is what pattern symmetry is all about. Now, it didn't take me long because I love identifying patterns. It's just, you know, some people's brains are wired like that. They see patterns in numbers. They see patterns in charts. I do that. And it just comes kind of naturally to me. Some people need a little bit of training, mental training to look at that. But the more you look at the charts, especially the way I draw the charts, it's not just entertaining. It's a big money-making entertainment. Because if you look at this pattern here, how similar is this? You had 1, 2, 3, 4, 5 major candle sell-offs. After that, it was a positive divergence where it created that double bottom, right? So this was kind of meaningless. Even the world was ending. These were 3 meaningless candles, but it created a major bottom at 2600, which created the second or the double bottom on the stows. That's all you need to know. And of course, my videos, I did those videos pretty regularly just within the past week, 10 days, repeating that over and over again. So I'm not going to say it's a no-brainer because nothing is really a no-brainer in this market, but these kind of major fat reversals in the market, I would say are no-brainers. Now, what's the hard part? The hard part, you all know. You don't act on it. And I get feedback from, a bunch of my members here and there. And one of them said, I'm $1 short and a day late. I said, there's nothing I can say to that. Because by the time it's confirmed, it's a sell. The market's going to sell off here. Literally, it's going to sell off there. And we're going to show you exactly what the markets are going to go. One of the things I realized about in life and on my days on Wall Street, and you guys would certainly agree with me on that when things, if somebody is doing something consistently in a very disciplined way and they're very right most of the times, it almost becomes like a normal, like, okay, he's right, so what? But think about how much money you guys are leaving on the table. And no excuses about like, oh, I didn't get time to do this and stuff. It's completely up to you. Because so much money has been made over the past if we were even making money on these kind of moves, intraday shorts, the pull-ups, things, I mean, the quick move up, but those are very tricky. This was the confirmed easy money trade. 1, 2, 3, 4, 5, 6, 7. 7 days. Today was the 8th day. Today was the 8th day. On the 8th day, the market rested a bit and starting to create a bull flag, which might turn out to be a right shoulder, moving down here a couple of 100 points. And we'll see that. It's pretty obvious by looking at this that we could very easily create a right shoulder. So I leave it up to you guys, all right? Because I've been showing this repeatedly over and over again. This is 2018. I showed you guys here. This particular sell-off, and I walked you guys through it. The conditions were so extreme. The internals were so blasted for reasons that we already know. Massive hedge fund blow-ups. China, global margin calls. Those are not jokes. Those are trillions of dollars worth of stocks being repatriated and sold. Foreign investors pulling out of China, certain Chinese markets. Massive billions of dollars in margin sales that need to be satisfied every day. And we saw that happen over and over again. emerging market blow-ups on the currencies as the dollar strengthened tremendously, that weakened and depreciated their dollar, smacked them down, their currencies across the world, the emerging markets primarily. And so it was a perfect storm. The volatility spiked all the way up towards 30. All kinds of stuff was going on. But once that subsided a bit, there's a little window the market gives you, and that's the window the market's giving you right now. Like I said at the beginning of this conversation, the most vicious rallies happen during big crashes. So what I was going to say was I was more convinced about the pull-up this time. And it's a very simple thing if you remember from my last videos. It's Newton's law of motion. Every action has an exact and opposite reaction. That's exactly what you guys are seeing. Exact and opposite reaction. It is so easy in a way, it's not even funny. What's hard is doing it. Tap your skull, brain. You know? Get angry at yourself. I do. Sometimes I sell a little bit early because my position size may be a little bit higher, and then I see it zoom up another 30, 40, 50, 60, 100%. But I'm still engaged. So going back to it, and I keep on repeating the same thing, but this time I'll address it. Why I was far more convinced on this particular reflex rally bounce, we call them reflex rally bounces, that's exactly what they are, is because I had a marker. I had a reference point. And that reference point was repeat reference points from February, March, April, May. Well, May was really small. Those were standard correction. But basically February, March, and April. Because I knew the playbook. Not just I. You guys saw it too because I kept on walking you guys through it. Because I saw what happened then and the structural patterns that I saw here, and I kept on matching the patterns aside from all the fundamentals and all that stuff. I said, this is just fantastic. This is literally a giveaway. The sad part is, there's two parts to this story, okay? Is that the sad part is that majority of retail traders, I'm not sure if the majority of real estate traders, because we've been spoon feeding them what to do, but who knows? I have a feeling that many real estate traders, but majority of retail traders out there completely, again, missed out on making, I'm not going to use the word a fortune, but even in disciplined trading, a very decent sum of money, recapture back things that they were caught in on the crash, and made back a lot more. So that's the sad part of the news. It is sad because to give away free money and have traders not accept it is a sin. It's like God's giving you it's His grace. He's giving you wealth. He's giving you he's just saying, here, take it. And you're saying, nah, that's okay. I don't want to do it. That's pretty much what happened. So that's the sad part of the news. The best part of the news is because of the very low participation and the huge amount of cash that's sitting on the sidelines, and this doesn't just apply to retail emotional traders, what we call RET traders. This applies to funds. Okay? Mr. Peterfy was on. He's with Interactive Brokers, the richest guy, one of the richest guys in Forbes, that makes the Forbes list, right? Peterfy, the Hungarian immigrant, amazing guy. He said that he's never seen the level of cash that's sitting on the sidelines, and that includes retail and small hedge funds, large hedge funds, huge amounts of cash. Where do you think the cash is going to go? One thing I know from as an ex-Wall Streeter, cash never stays in cash. Cash doesn't earn you anything. Fund managers and active people, it's a multi-trillion-dollar business. Mutual funds, hedge funds, pension funds, institutional funds. You think they get paid on cash? Look at the mechanical aspect of the business. They're not going to stay in cash forever. And the world's not melting. We went through a huge, huge meltdown. And we still traded through it. And there were many, many days we still came out green. Many of you did too. So the fact is, and like I said in one of my webinars, that if you can make a green day in the middle of these crashes, which we had quite a few. I know I did. Okay? Through intense volatility. 1 minute market's up 200, the next minute down 300. You can survive anything. It's like one of my buddies who's done 6 tours of Afghanistan. He knows every single mountain hideout. He's a great guy. He's set up schools for orphans. He's just an amazing guy from Massachusetts. Like he says, after his 3rd tour, he was seasoned. Well, ladies and gentlemen, this is your 3rd tour, okay? This is your 3rd major crash you're going through in the market. And by now, it's time to get seasoned, all right? Because this is a battle, a different type of battle. And in order to be seasoned, you have to know. You have to have the tools. You have to have the right armor. You have to have the right weapons. And you have to have the right visuals. Because when you're out there in the mountains of Afghanistan, and those are the Khyber Pass and all those places, one of the most treacherous, most vicious mountains where Alexander the Great, if you know history, couldn't even cross at one point. That's why he could never really invade that part of the world that much. He did go into northern India way back, okay? And those guys, some of the bad guys out there, they live and grown up there. They move from the mountains like those mountain goats. They just move up so fast. That's why the Taliban's so difficult to get to. And these guys, our boys who went out there, a couple of tours, and then they navigated it, and they knew what to do. So ladies and gentlemen, this is a battlefield. And if you don't have the right reconnaissance, and if you can't see, and if you're a sniper and you're looking to get that trade done, and you don't know how to read these charts, or you don't know what you're looking at, well, you're going to get shot, decimated. And the algos do it to people every single day. Now, that doesn't mean that we completely are devoid of emotion, but it certainly means, and I'm sharing you my thoughts, and believe me, I'm no superhuman. I'll be honest about that, okay? Is the fact that I'm not scared anymore about the markets. After what we went through and how we traded this whole thing, half the hedge fund community is not only deep underwater, half of them are hiding under a rock. And now they're coming in droves. That's why you get the 500-600 point drops. Rises. Exact pattern symmetry. Panic buying, like I said. So the point is that I just feel so seasoned right now that throw me out in the tour of duty out there. Just give me another 1,200 point crash and I'll tell you guys, I'll make money regardless of what. And guess what? You guys can do that too. Now, some of us have the luxury. I wouldn't know if it's a luxury or not because we're stuck to the screens and I'm looking at multiple screens and some of you are busy with work and stuff. But like I said, you don't always have to be an active trader. Active traders obviously can make a lot of money off volatility. Sure, they can lose a lot of money out of volatility too because you're getting a little too active. But you can be a swing trader, but you got to take advantage of these moves. And I really want everyone to take advantage of these moves because I don't know what people are waiting for. There are no breakouts or breakdowns. There are certain confirmations where the market is technically going to go higher. But by the time they think it's safe, there is nothing safe anymore. Get used to it. There is nothing safe about investment. There's certainly nothing safe about options trading. So when people talk about, oh, is it safe? Like, what do you mean it's safe? You can say, yes, some of the global risks have subsided, but then the next risk might show up. The Chinese shadow banking, which is a $2 trillion or $1 trillion shadow banking industry where the Chinese government is desperately trying, and they're succeeding in some ways, to manage and navigate that. It could take down part of their economy. Could cause a global crisis like we created one with the mortgage garbage back in 2008, 2009, right? So the Chinese could create one accidentally create one because of the shadow banking issues. Remember, the last financial crisis was created by us. By us. Good old made in USA. House of Wall Street, I should know. Definitely on Netflix or one of the things. Netflix, I think, has it. See The Big Short. Get an understanding of why things happen. So those things have been contained in a way that we have lots of risk prevention measures, capital controls are higher, all kinds of stuff. So, but in that case, yeah, the market's a lot safer. We have a functioning government. We had a election, midterm election, a big one, without any crazy violence or mess. It went through. Great. Democracy at work. I've been around the world a lot, and trust me, our democracy with all its flaws still is the best. Believe me when I tell you. Okay? Through all our flaws. And yes, we are all idiots at times. And we squabble like little rabid dogs at times, and it's shameful. We don't get stuff done. We blame each other like as if the other person is not a human. It's terrible. And but despite all that, we're still functioning. So saying all that, in that respect, yes, the market's a lot safer. But risk can arise at any given time. So, saying all that, we got just a couple of days, guys, between now and end of the year, Christmas, and more importantly, Thanksgiving. I love Thanksgiving. Getting together with the family, it's just great. And you know what? Markets don't crash before Thanksgiving. I've said that for years. So get ready for the next leg up and make money. Join in. Don't have to be in the chat room. The chat rooms, people are busy. But don't disappear. Do not be scared of the market. Do not be scared of the market the way we structure the market. Look how we structured this. All right, we'll get into this chart first. This is the E15, ES15, right? 15 minutes. I put it out there with all the parameters that, okay, if it goes here, it goes here. I know what to do. You don't need to rapidly be trading long and short on these tight ranges. I don't a lot of the time. I did one short. It went from, we did that, right? The SPY shorts, the 280s, they went from about 82 cents. Sold my first batch at 104, re-entered back around 90, and it went to $1.35 when the markets hit down 100. Nothing wild, but good, 60, 70%. Didn't go anything crazy. Lots of other things were working here and there, and techs were getting hit. So these are things that you guys will learn as time goes on. So what I did today, I sold the techs. I popped them real nice. When Netflix popped, I took a bunch out. And I still have Apple. Tesla's fine. I bought the cheap calls. So here's a couple of real trading tricks which work for me. One, I look at the sectors which are getting hit a lot. I'm not going to be just diving in on prices. So I lightened my level on the overall tech side a lot. And I was playing all these other stocks, right? Look at the names. We have the Etsy's, we had ULTA, which went berserk. The calls went from $1.70, $1.90 to $6. Guys, that's 200%. You could buy one. That's $190. And make yourself $400 in 20 minutes. And that was a beautiful chart because it wasn't just say like, oh, I'm buying a reversal trade when it's down a gazillion points. It's a candle going boom, straight up. Showed that. Grab one. Just for fun, grab one. $190 blowing up in your face is not going to kill you. All right? Or grab four. And make yourself $1,000. Or $1,600. One trade. Unless you're down on something, that $1,600 should take care of business of what you're down on the other side. You got to do these things, guys, especially when the charts are that powerful. Now, in volatile situations, certain trades just all of a sudden they go boom, go the other way. Okay, got to accept it. That's trading. So, here are a couple of tricks here. You don't need to be very active, but if you have the time and you're looking at the screens, you have to buy my alerts. Just buy one call. If the call is 80 cents, buy one. Because unless you test out your own skills by using my charts on these alerts that I'm putting out through, you're never going to learn how to trade. The market is the ultimate teacher. I'm not. So always have a little position in an alert that I'm putting out there. Sometimes they'll just go nuts right away. The second part is that if you're doing a swing trade, you got to buy yourself time. So either do November 16th or November 23rd. Both are good. One is monthly OPEX and one is right before Thanksgiving. They're both good. Now, if they vacillate around, fine. It doesn't matter. As long as if you're looking at some of my charts and I'm showing you right off the bottom, like Scientific Game, SGMS, right? So those calls, when I put it out there a couple of days ago, I showed you the chart on SGMS all the way from, so there's your ULTA on the daily. That's what I was showing. All right. So ULTA, I said to buy the stock like somewhere at the beginning of the morning. It was 274. I didn't even see that. And we played ULTA many times. And then this candle started developing. So somewhere around 290, I said, man, we got to get in there. And we did. And the stock went to, I said it was going to go to 310. It went to 309 or 308.88. And the calls exploded from less than $2 to 6. I was out in the 5.5 range. And then I rolled them out to the cheap ones, which are the 315 and the 320s. I mean, you do not want to waste seriously, don't waste these opportunities. This is such a powerful chart. It's not even funny. You don't need to be a rocket scientist to figure this out. Look at this channel. And this is going all the way back to the beginning of the year. One way or the other, it's going to climb its way up to 320. That's why I bought the cheap calls. Now, if you're trading this on a 5-minute basis, and if I had caught the reversal here, which I should have, but I wasn't really monitoring it, even though it's on my screen, I mean, that would be gazillion points. That would be like 600-700% on the money. Look at this move. And then you had that quick, this is a 5-minute chart. And then you had that quick consolidate, what do you call it? It's a bull flag. There. Now it'll go higher. Technically speaking, it'll go higher. And the other thing, too, which I want to remind people is, you guys are smart people, right? So you guys overthink too much. I got traders who've been with me for years. Still talk to them here and there. You know, they'll send me a text, whatever. They're far dumber than you guys. Trust me. They don't overthink. They just said, they look at the chart. They've been with me. They understand it. They've done some ACS sessions. They get the basics of how to read these things. They've made money off these things, so their confidence level is higher. They just throw in the money and just do it. Just do it. Stop going through the most fatal disease a trader has, which I guess in life too, is analysis paralysis. You guys, some of you are just overanalyzing things. Just don't overanalyze things. So let's not overanalyze and let's talk about this for a minute. The markets were up how much yesterday? We were set up nicely before that, but the markets were up 500 some points yesterday. The markets were up 11 points today. So without overanalyzing the crap, if I asked a kid, hey, not a kid. Yeah, let's say as a teenager has no idea about the markets and stuff. Listen, something was up 500 today, and then the market was up another 10 points today. Is that good or bad? They're going to say it's good. Well, it's good. Don't overanalyze things. Don't leave trades on the sidelines because you're overthinking too much. Put a little money in there. Do a basket approach of my alerts. 1 call here, 2 calls there, 3 calls there. Don't lump into something in a big way, because chances are you get blasted out because you're just lumping in because you're emotional high on that stock, because you've made some money on it before, whether it's a Netflix or an Apple or a Google. Don't fall in love with these stocks. And if you're not following the charts, they'll kill you. They'll just smash you. That's just the way it goes. So anyway, so that's your ULTA. So looking at SGMS, for example, this is what I wanted to. What happened here? Oh, that's another one. Okay. I thought it was looking at ULTA again. So this is the chart I kept on showing you guys. And you got to, So let me give you a piece of good suggestive wisdom. Not advice. I don't advise, right? I'm not a licensed broker to advise you. And neither do I want to. It's a real pain in the butt. I gave the stock to you guys around this level. Okay? You look at a chart like this. You got a double barrel, double bullish formation, and I drew the lines and everything. How can you not buy it? I'm not just talking today. I'm talking the other day when I was recommending the stock in the literally off the 2022 level. It is absolutely borderline asinine, stupid to look at a chart like this and not trade this, knowing, and it's a real company, Scientific Games, and it caught my eye because I've traded it before, but also because they're getting big in the sports betting online industry. These guys make the software and the hardware, I believe, for all the gaming machines in Vegas. So I know the company. Stock's down from 60 to 18. It is a screaming buy, and they're entering a very highly profitable part of the business, which is sports betting. Do you really have to overthink this? You buy something a month out or 2 months out, and you're going to make yourself a good solid 5-6 points on the stock, and you need to basically get at least 100 to 300% on your, or at least 200% on your calls, just on a swing trade. And the way I've structured the chart, you can clearly see what's going on. So today was pretty monumental on the stock because you had the 50-day and the 34-day blown, boom, it went above that. So at this point, the stock will attempt to move towards this level, and you're going to start to see the 34 and the 50 moving average is starting to turn. In the meantime, if you wait around for the stock to go from 26 to 30 to 35, and this can happen rather quickly. The stock alone today was up 25% on earnings, right? So what gives? Stock's up 25% on earning on a short squeeze and some, I don't know what their exact numbers were, but they must have said something good. Don't overthink it. So don't you want to be in a stock which is coming off a 52-week low with a monster upside, which I'm not saying it's going to do that, but I'm saying that you could get 6 points here, 9 points here. That's good enough to keep you happy and a bunch of money in your pocket. And the best part is the calls are so damn cheap. Next week's calls are $1.30. Going to December, they're probably $2. All right. Let's go back. So the other important thing that if you're an active trader, obviously this is absolutely essential. That when I structured these charts, I draw where the lines are. This is a simple chart without any stochastics or anything. I actually constructed a chart today. I felt that this was a bull flag consolidation channel, and that's exactly what it still is. If it breaks out, you got that move up another 200-300 points, and the market basically hits the upper end of the range. I don't want to keep on repeatedly showing these charts because I've already posted them several times. Just going to skim through them. These are the charts that keep me in the game without blowing me out. Keeps you guys in the game without doing stupid things. These are the charts that keep you non-emotional, and I structured them extremely accurately, and that's exactly what the markets will go or not go. Sometimes they'll slip and slide below that. Fine. At least I know what it is. This is your major support. Kept on talking about it. I want to keep on repeating it like you guys are like, you know, some kindergarten kids. But you got to follow these charts. You got to look at them every time I'm posting them, or you can replicate them on your screens and look at them whenever you want. Because without looking at these charts and really understanding what the heck's going on, every twitch in the market is going to make you a MOC, monkey on crack, and you're going to do the stupidest things ever. And I cannot overemphasize the importance of not doing stupid things. Okay. There's your hourly chart. Uptrend's intact. Looking fine. There's nothing to it. Don't overanalyze it. Just the first glance that you see, if it's telling you that the uptrend is still intact, uptrend is still intact. Nothing to overanalyze. I still think we get towards that, well, this is 2,900. That's way up there. We still get to that 28.25 level. That's good for about 100 to 150 points. Big arrows up there. Nothing to repeat here. There's your NASDAQ today. Everyone's freaking out about the techs, and the techs were getting clobbered, right? They were coming back, but they were getting clobbered. But we weren't really playing in techs today. We had those other alerts, and we're pretty okay. The techs were like popping up in the morning, so you had to basically get out in the morning. That's what people do. When I said Netflix buy it, it was like $2 and change. It went to $4.50. I had just a couple. I blew out of it. I have next week's ones, but those are down. But far less on the losses, far higher on the net profits that I got when Netflix popped up earlier on during the day. And I saw those options just move up real fast, out. Now, this is your NASDAQ chart, and it's really not looking that bad. What's looking bad are the stochastics are curling down. So in order to see whether this is a full-scale demolition derby of the techs again, I draw this particular chart here. Line here. That is the line. That's a red line that the stows cannot cross, because if it does that, then we're going to have a real sell-off. Remember, we did the same thing here, and we pulled up, and then we had a correction, which is what it looks like right now. Look at this carefully. Right there. Techs were getting hit that day too, just like today. Apple was down about $1 or $2. Amazon was down. Well, Amazon came back strong. We played that nicely at the end of the day. Amazon is down 3 after being up a lot. I love Amazon down 10, $20. You always make money off those, buying those bottoms. Okay. Google was down 14. Tesla was higher. Whichever the case, that was another one of these days, which was just a couple of days ago. 5th. This still looks like the same. So the stows should come down here where they bottom, right there. And they should move up from here. If they don't, and the full stows do a full reset, that means that it's going to break below the uptrend line. See the uptrend line? It's going to break below that. Break below this nice fat support line at 173. I'm talking the Qs. And it's going to come down towards the 169, 117 level. And it's going to feel like the world's falling apart because the techs are going to get hit. Do I think it's going to happen? I don't think it's going to happen, but let Mr. Market decide whether or not that's going to be the case. But so far, I see a minor pullback within this consolidation channel, and then a breakout again. The final destination is around 179, 180. You can see that clearly from my charts. Nothing to explain. Right there. This is still a cup and handle. The final destination is right here. And that's where the big fat resistance comes in the market. And that's still quite a few points away from here. That's on the Qs. Let's go over this very quickly. It's very clear to see that this is a massive, this was the point of breakdown right there on the 18th of October. Okay? The real point of breakdown was, the 10th of October. Right there. That's when the world fell apart. Looking back in hindsight, the candles are so easy to see, right? But that's how we determine what we're going to do. So we'll listen to this next couple of minutes real carefully and be prepared to act and not freak out every time the market is down 30 points. All right? You still have a chance to make some real decent money off this reversal rally, even though some of you might have completely missed out on them, which is just horrendously sad. And I'm sure it's painful to people who did. I don't need to remind them. So saying all that, this is what it's looking like. This is a major, give or take a couple of points, this is a major resistance level. This is the major breakdown. So here is how you draw it. Okay? So that is what? What is this pattern?
Inverse head and shoulders.
There you go. It's an inverse head and shoulder. Then inverse head and shoulder, it's basically a Texas bullhorn pattern, to be honest with you. See? It's a very positive pattern. It gives us another chance to load up instead of going hog wild. Because then the other painful part of being a trader is chasing, right? Just, oh my God, it's up 15 bucks. I missed it. And then you see it go up another 20 bucks. And like, oh God, why not buy it? Another 15 bucks. Because on those big up risk days, remember the risk days in markets mean that those are the days where stocks are flying, right? Those are the risk days. Those are the, and the de-risk days are the ones that money's flowing into bonds, leaving stocks. So risk on and risk off, as you know. So risk on is a good day. All right, for people who don't quite understand it. Risk on means the risk is on because stocks are classified as risk assets. So boom, everything's going fine. So looking at this chart here, if somebody needed to determine what's going on, I don't think this is going to happen tomorrow, but we are right now, we are creating a small bull flag, which in my opinion will try to bump up towards the super resistance level, which was right here, kept on pointing out. The 28.25 level on the E-minis. And once it hits that, it might overshoot, but more likely than not, it's going to pull back. And that generally happens, as you guys have seen, like clockwork. Give or take a couple of days, middle of the month, and that's coming up next week. Next Friday is the 16th. So, and it also happens to be monthly OPEX. So there are two things going on here. There is going to be a corrective reset prior to the push that you get on monthly OPEX options expiration, which is Friday. So next week is going to be volatile. How about that? Just put it that way. So whatever you do, you don't want to be overloaded with things in the middle of volatility. But you do want to capitalize on that volatility. So if this happens, and let's say I'm talking about extreme scenarios, and we pull back hard and test the left, this is the left shoulder, the right shoulder is at 27.50, and we drop from 28.25 to 27.50, you are talking about a pullback of 500 points. From 28.25 to 27.50, because remember, this was a 500-point candle. It is a quick calculation. That's a 525-point move on the Dow. The world's going to freak out again. The media is going to say, the same old garbage talk, Here we go again, looks like nobody's got any faith in the markets. And the Dems are going to impeach thing. It's going to create a constitutional crisis. You know, all the garbage that you hear over and over again. Ignore the noise. It'll be a technical move. You want to take advantage of it. We'll do the SPY puts, do any one of your hedges that you do, VX calls, fixed calls, whatever whatever you want to do. But this is a possibility, okay, to create the right shoulder. Once it creates the right shoulder, keep in mind there's a lot of stuff going on towards the end of the month, right? We got the big meeting with Premier Xi at the G20 meeting. That's going to be big volatile moves. Every word coming out of there is going to be big. All I know is that I don't think Donald is going to go out there and President Trump's going to go out there to insult Premier Xi. I think he's far more diplomatic than that. Don't forget that President Trump has done enormous amounts of business with the Chinese, so personal business. So he knows all the big players there. Besides from the politics aside, he respects the leadership, and they respect him. They do, and they're not going to have a fist fight in the middle of the G20 meeting in Argentina. That I can assure you. And I think it's going to be a reasonable communique that they are going to restart serious negotiations. Don't expect a big hug and like all kinds of stuff, but who knows? There was a lot of big hugs with the fat guy in North Korea, so why can't there be a big hug with the Chinese, right? It can happen. So the bottom line is that if 525-point moves, very likely. If not, given what we see, and we're going to look at one other chart, which will give me a lot of a better direction on the directional bias. The short-term move is going to be very quick. It'll probably be a one-day event or a two-day event, one-day event. It'll reset the whole. Remember, this is the daily. It'll reset this one down again towards the oversold zones, or at least halfway. If it's a sudden one-day event, we're going to get reset right away. You want to buy with hands down. Reasonable. Disciplined, hands down. Don't go crazy, but you got to buy. Of course, I'm going to be there putting out my alerts and stuff. That's one scenario. Second scenario, it's a minor pullback. Just creates a big. Remember, this is powerful. But this was very powerful too at that time, and then it gave in, right? But we don't have the same type of market conditions with the emerging markets, the currency devaluations, all that type of stuff. China completely falling apart. We're not having that. We have passed that phase. So that big asset dislocation risk is not there. So this could be a pullback right here, 100, just to retest this channel towards the 2797, like 100, 150 point move, and then a move higher. One way or the other, in my opinion, after we do the retesting and all that stuff, the market will retest the big fat breakdown level, which is 2880, roughly about 2890 on the S&P 500. It'll happen. And this move, I'm saying this now, and a lot of the things I say come true, so don't waste my words and just like sit around and do nothing. This move might happen when? On what type of big time positive catalyst? This move meaning an equal and opposite green candle. When do you think that's possible?
China news.
And what would be the China news? Think.
We reached an agreement.
Or like some sort of like friendly chat or a communique on the G20 meeting, right? So that's it. There's not going to be things solid like crazy agreement. It's just going to be like, friend. So this could happen around November 20th, right after the middle of the month jitters, after monthly OPEX, and it's a very big possibility. We cannot miss this. It's going to start off overnight, just the way these big ones start. And then it's just going to pick up steam and just go nuts. So we need to be set up prior to that. Follow my alerts. I'm going to be looking at many different things. And by the time the market, if and when it gets there, you want to short the crap out of the market. Because by that time, things will be severely overbought. Just overbought, oversold. That's it. Now, I could be dead wrong and the market just keeps on going. And then this move is taken out and the market goes back and retests the 29.50 level. Can it happen? Sure, it can happen. I'm just giving you that this is a major point. It, in my opinion, is a very shortable point, but I could be very wrong. So that's the pretty much what I think is going to happen. We are futures are down about 4 right now. Nothing really happened today. If we start to develop a candle like that tomorrow, then expect a follow through on Monday. So if I start to see a candle of this magnitude start to develop, I am getting out of my long positions, trading positions, and I am going net short. Because that means the right shoulder formation is starting right away. And remember, the sooner the right shoulder is formed, the better off we are from a long standpoint. But if this candle starts to broaden on the daily, and at that point this is going to start to curl down, you don't want to be sitting around saying, oh, the market's going to bounce, the market's going to bounce. No, the market's not going to bounce. Yes, there'll be intervals during the market during the day where the market's going to attempt to bounce. But and this being the swing chart, right? This is the daily. As the candle starts to expand, that means big money is just at this point. Again, they're trading the market just like us, except we're better at trading the market than the big money is, honestly speaking. But the point is that they got more force. They're more weight. They're 800-pound gorillas. So if we start to see a red candle development, which takes over half the body of this candle, then you know it's going down. So whatever attempts, remember, these were attempts to reverse. See that spike? You know, that was an inverted hammer, but it wasn't like this all the time. During the day, it tried to rebound fast, shake out the shorts. Happened to me a bunch of times. I'm short, bunch of contracts, feeling good, up 20, 30, 40% within a matter of 10, 15 minutes. I turn my head. The next thing you know, boom, there's a reversal candle. And instead of being up 40%, I'm down 20%. That's where the discipline comes in. I look to see whether or not it's cooperating with the internals. I look at my other charts. I look at the VIX, because I watch the VIX like a hawk, right, on one of my screens. I'm sure you guys do too. And the VIX is still showing that it wants to go higher. Then I go there and just sit there, or I'll add a few more to cost average my puts. Just the way I cost average my calls, I cost average my puts. So we don't know if this is going to develop. There is a possibility, and we have to be ready for it. And the minute the toes cross down, then you know we're going to go in for the right shoulder formation. Just letting you guys know. Now, if we look at this here, this is your S&P. Here are the warning signs. It's overbought, and it's starting to turn a little bit. First sign. You don't need to be a rocket scientist. It's not giving us a full signal, anything yet. But if this crosses down, that means this doji, today was a doji, a green doji. Look at that right there. Take this line out for a minute. Right there. The bulls are going to say, perfect day. It's a green doji. It's a bull flag. It's okay. The bears are going to say, no, it's not okay. It might be a green doji, but look, the stows are starting to creep down a little bit. I don't know yet. All I know is that at face value, this is okay. It's okay. With all the hammering that the market took on the techs, it's still okay. So there you are. But if this develops, this green doji, it's very simple, guys, very simple. It starts to develop into expands as a fatter candle. And remember, this candle wasn't formed in 1 minute. It took a full day for that to handle. So if I see it developing, you know that in this type of market, you want to go draw down your cash You want to go at least some level of short hedges and just sit there. Look, many traders in our group made a lot of money over the past couple of weeks, especially the past 10 days or so. Don't give it away to the market. The ones who didn't capitalize on it, understood, start now, long and short, because the moves are going to be wide. That means the profits will be large if you have the right directional bias. Now, sitting there analyzing 30 different things, trying to figure out is not going to tell you anything. Trust me. Mix it in with what you guys looking at, with my charts, which are simple as simple. Keep it simple, stupid, right? The KISS method. Just look at the candles. The candles start to on the daily start to push green, start to become fat red. You short. That's it. There's nothing to it. Now, is it that simple? Yeah, a lot of times it's really that simple. But this rebound is very powerful. There are still significant amount of short positions out there that need to be cleaned out before the market really is a tradable short. And I believe that that is where the 2850 level, 2840 level comes in, because that was the level where there was a gap way back then in August. And out here, the hardcore shorts, technical shorts, are going to be flushed out. So that means there's no safety net. When the markets are falling, the safety net is your shorts. You understand that, right? Because the shorts will cover and create these big, powerful bullish engulfing, because that's the first candle, as I've always said, is nothing but smart shorts who made money and getting out the heck out of Dodge. The dumb shorts are the ones who short this candle. Then they get completely blasted out because the market gaps open, goes up, comes down a little bit, they're shorting again, like, no, the market's going higher, lower. Yeah, great. And then the market basically blasts them out again. And once they're blasted out, it pulls back a little bit, gets the shorts happy again if they're shorting again, and then this happens. That's what we call a short genocide. Not a nice term to use, but that's really what the machines do. The machines are equal opportunity killers. They'll kill longs and shorts. So when you see big put-call ratios, you see large trend readings, you see large amount of, well, those are the main ones that I look at. Okay? And you know that they are going to basically come in and to destroy them. So far, I don't know what the short positions are out there, but they're still pretty high. I know that. And the trend today was pretty high. The trend, and get the definition, is the ARMS index. Dick Arms is the one who developed that index. Just to let you guys know, the trend index today was 1.65 for the New York, and for the NASDAQ was 1.21. Those are high readings. Anything above 60.6, 0.71 are high readings. That means there was a lot of internal capitulation selling going on. It's a contrarian buy signal. Okay? So when I see a trend of 1.65 on a day that the Dow was up 11, the NASDAQ was getting smashed. Okay, they were down 40, but still it was only down 0.5%. 1.65, and I just saw it for the first time actually right now. And the trend Q at 1.2, ladies and gentlemen, those are high readings. That means the market has a very damn good shot of a sharp bounce. And I'm not talking about a 500-point bounce. We already got that. But those are nice oversold readings. So we'll see what happens. But this is the zone pretty much where I believe where we have a great shorting opportunity. And of course out here where the markets broke down, which was 28.75. And we are getting overbought. Now, enough of these ones. Let's take a quick look at the SPX on. Okay, this is the same chart, but on Thinkorswim. A lot more structured. So this is the line that I had there, 28.17, because that's where the market broke on the 17th of October. That's exactly where we went to. like I said, it was going to, anybody could draw these charts, honestly speaking. It didn't need to be a rocket science. All you got to do is just draw a horizontal level, right there. So that's your supply point. So it's only natural that we stall a bit here. So today was most probably just the stall part. Now, here, there is no let up on the actual S&P stows. They still has gapping higher. I'm pretty well trained. My eyes are very well trained to look at the trajectory of the trend lines, right? So the trajectory of this stow it's still very sharp. So that tells me that we will at least attempt to kiss the 50-day moving average, and which is right there, which is 2830. There's no magic to this. I've said this from day one. We had massive standard deviation was almost -7, according to my calculations. Some of the guys that have heard in Bloomberg and stuff, they say it was a -2 read. Maybe they're looking at a different metric. Doesn't matter. It was a huge standard deviation. I kept on talking about it. I kept on reminding you, ladies and gentlemen, about this. It was a screaming buy. Screaming buy. I mean, literally screaming. You bought, you screamed because it went down again, but then you added a little bit more. You screamed because it slipped again, but everything was telling you that you were going to get very well rewarded. Well, we did get very well rewarded. So you can't miss these opportunities next time. Seriously. You got a mean reversion of -7 from the 34 and the 50-day moving average. I don't care whether we're in the worst grizzly market or not. We are going to at least bounce toward the magnet, which is the 200-day moving average and the 50-day moving average. And then possibly fail there and then fall again. That's what happens if we have turned into a bear market. The most vicious bounces, reflex bounces, happen in bear markets, not in bull markets, guys. So if you're sitting around living in La La Land, waiting for whatever you're waiting for, you will never, ever make the money or make the big money. Seriously, okay? That's the eternal truth about the markets. So it's very simple. We will attempt to kiss the 50-day moving average as 2831. Maybe we won't get there, which means the market's going to fall again. Maybe we won't get there. So as tactical traders, we are looking to scalp about 20 points here, or 25 points. That's good. 25 times. You're looking at roughly about 150 points on the Dow before we reach the 50-day. Now, there is a downtrend channel. Remember, we were trading in this downtrend channel before the big crash happened. So this downtrend channel is somewhere around 2850. If we go above 2850, trust me, there's going to be another 500-point rally, because that's when the hardcore shorts are like, they're just going to lose it if we move above there. So these charts are very clear, guys. But I'm not even going there. All I'm going at is this is still surging forward. We need to get I believe it's a percentage K, the 20 line, this one, up here. That's when over 80, that's when you start getting, or close to 80, that's when you start getting severe overbought conditions. You start getting negative divergences. This will start to come down, and the market will keep on going higher. You know what that means? Give it a couple of days, the market's going to drop hard. That's the way we get positive divergences off the bottom that I kept on showing. Remember? Positive, and the market was still falling. Market was still falling, couple of 100 points, but the internals were still telling you was making a higher high, a higher low. It was. I know many of you are in the learning stage. It is a giveaway. It's like handing you thousands of dollars in money, and you're like, no, I don't want to take it. It's okay. Thank you. Okay? That's what positive divergences do. Every single time. Positive divergence. So I have these lines here. It's a layup. There are lots of jostling around. The market will create a lower low. Internals will create a higher high. You don't need to be a rocket science. You just freaking buy and you hold. You take the pain of holding it that day, and then just going to wake up one morning, just the way it happened here, and the markets go boom, 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 boom. And you're sitting there going, oh my God. That's it. So the same thing that we have positive divergences on market crashes, we get negative divergences when the markets are getting too frothy. So at some point, markets are going to get up here. They're still going to keep on surging. Do not get excited. Keep on watching this. Once the percentage K goes up close to 80 and then starts to, and that's when you start to get the pull downs. It has to go above that. That's why I'm saying we're not fully technically overbought yet on the daily. The orange line has to get towards the 80 level. It is far from that. You can see that. Okay? It has to get like this. So let's say you knew nothing about the market. You're in a cave with the fastest internet connection. You're running at 1 gigabit speed. You got the fastest computer. But you're getting my charts. So all you got to do is just trade off that. You don't need to know anything else. So I'm going to be watching this real carefully. And once it gets up here, you generally tend to have it top. You see that very clearly. But the percentage K line, which is the orange line, has to move up towards the 80 level. Somebody's writing something. I wanted to ask you about the NYMO. Yeah, I'm going to show that very quickly. All right, so that's it for now. So we were prepared for it. Remember what happened here. And this is the same pattern symmetry. Same pattern symmetry. This was the big crash. This was the big crash. We bounced hard. We pulled back. We're bouncing hard. We're going to pull back. Then we're going to bounce again. We're going to bounce again. We're going to create a monster pullback. The McDonald's style. When will this monster pullback come? Maybe in January. Remember, tax selling and all that stuff, first part of the year. Once we create that, we might just go up. I don't know what the heck's going to happen the first part of next year. All I know is these type of big volatile moves, I'm seasoned. I've done my tours of duties, and so have you guys by now. So stop hiding in the cave. Our boys don't go out there and hide in caves. They shoot the bad guys. Well, we shoot the bad guys. Those are the algos. Seriously. This ain't grandpa's market. This market is always going to be like this. Trust me. Elevated, enhanced volatility. Within ranges. Okay. Now, so we're good with that. And be selective on the stocks. The best way, the last thing I'm going to tell you very quickly, the best ways that I have what's the word I'm looking for? Made a killing on these type of big volatile moves. It's just playing the Qs, playing the SPYs, the SPX, the IWMs. Don't bother about individual stocks, to be honest with you. I'm talking about extreme circumstances. Of course I play individual stocks, and I mentioned some of the other ones. But just playing the SPYs and the thing, those are clean, they're pure. Or do the futures, people who are futures traders. You don't need to be like selective. Oh, am I going to buy Google? All of a sudden the market's up a gazillion points, but Google's down because Donald tweeted out that he hates Google. You know, so there's always individual stock risk when it comes to extreme circumstance in the market. So just play the pure market. Don't overthink it. I found it to be extremely profitable. Okay, now I watched it. It was like close tonight. Okay, so I'm going to show you guys two other charts. Which I have prepared on the other side. Oh, the other behavioral sentiment, which is, you look at the put-call ratio, look at that stuff. Just look at yourself in the mirror. People, first of all, never really made the money they should have. Okay? And number two is I could have made a lot more than I did. And so I didn't even reach my performance, so forget about some of you guys. And secondly, the overall fear sentiment is extremely high. The money balances are sitting there. Nobody, Remember, this was a traumatic experience. What happened when you fall? So you're in the emergency room right now. So in the trauma center. So it takes a little bit of time for mom and pop. You need a couple of 500-point days, which we had a bunch of them over the past couple of days. So now they're just starting to call the phone. And I'm not kidding. They're calling up their brokers, they're calling up the mutual fund companies and say, hey, maybe you want to look at, can I go into that, Voyager Growth Fund, Putnam, or Fidelity Emerging Market Fund? They're just starting to pick up the phone now. It's always the case. As tactical traders, we buy the deepest, darkest, critical technical lows, and that's where the big money's made. After that, it's there. There's still, like I said, this will most probably be repeated, so we'll probably get another big candle, a couple of 100 points one day. But after that, it's going to get very difficult. All right? So the fear indicator, which I've shown a few times, it's a pretty reliable indicator, believe me. We're still in the extreme fear zone, but that's a lie. Most people, like I said, look at yourself. I always look at myself in the mirror and say, am I really excited? Yes, I'm very excited because I feel like I've done my tours of duty. I know what I'm doing. And this time I really know what I'm doing. Because I see the pattern symmetry of what happened before. So that's why nothing really scares me anymore. After waking up every other morning with some long position and the future's down 40 points and still being green for the day, doing those reversal trades, you gotta, like I said, rejoice in your success and say, man, I learned something. I can handle anything. So I really I'm getting that feeling, and it's a good feeling, that I've earned my stripes of extreme volatility trading. Give me any type of market, I'll make money. I'll make money. I don't care. The hardest money to make, believe it or not, is on runaway bull markets. And you guys know that too. Runaway bull markets with markets gap opening every single day, Amazon going up $30 every day, are the most difficult times to make money. I have seen it in my own, within my own members. Reversal trades from critical tactical lows are the easiest times to make money. Chasing and buying and running into a runaway train is a much more difficult trading strategy. You guys know that. So the fear in this is actually around here, I would say. It's more like around 10. There's a lot of fear. Markets are up, a lot in the last 10 days. So I look at that. I look at, so this is certainly not, and nobody's happy, trust me. I always use behavioral stuff, meet my neighbors and big shot guys, and they're like, oh, is the market really going to go down like another 10,000 points? I say, yeah, sure, it is. Yeah, absolutely. Scared one guy. I said, yeah, the market's going down 5,000 points, no problem. He's like, you kidding me? I said, yeah, I am kidding you. So this is what people are talking about. There's no talk about like, oh, markets are going to go higher and make another new high. There's not a single peep talking like that. Other than Marko Kolanovic, if you guys remember, the Quan, who said it all. This is extremely bullish. So when it looks that extremely bullish, I get a little bit like, whoa, is this really? Can this really happen? I think it's going to happen, guys. This is really one of the most bullish directional charts that I have seen for 8th of November. We love the number 8. And today I'm saying it. It's so freaking bullish, it's not even funny. I feel like just buying things 3 months out and just saying, I'm not trading, guys. I'll just put up some charts, talk to all you nice people in the chat room, have, shoot the shit, excuse me, and that's it. And just buy some leaves 3-4 months out, 6 months out. Not that long. I'll buy it like 3 months out. Why is this bullish? Now, it's bullish because of this. The same stuff happened. Now, this is the SPX 533. Very reliable. Nothing is guaranteed. Very, very reliable. The crossover that happened in April. Throughout the crossover, as it was happening, you did get some volatility. You did get another double bottom. But that was a screaming buy double bottom because the internals were still crossing over, going higher, the stows. So you could have bought the double bottom, which we just explained could happen, hands down. And the market kept on creeping higher. So if the same scenario is being played out, because the stows are not just a bunch of two stupid lines. These are very powerful relative strength indicators. So if this is the case, then we have a good shot to get towards the 2,900 level. That's another 100 points from here. And we already showed that on the other charts. That's 600 to 700 points on the Dow. And we might get that, you correctly pointed out, on the G20 summit. Maybe Donald gives Premier Xi. They actually like each other a lot. They're both tough guys. Xi's actually a lot tougher than Donald. I'm talking about, like, you know, that guy could shoot somebody in the head and just walk away. Donald wouldn't do that. He'd have somebody else do that. And I'm just kidding. But he's my buddy New Yorker, right? But Donald's more of a sharpshooter when it comes to the Twitter account. He's not a physical guy. Premier Xi he's a tough nut. The guy who probably breaks somebody's neck, you know, while they're sitting. So the key is, what if they give it kind of a semi-hug? Got to watch the body language if they show it. Boom! Markets go nuts. And nothing else happens after that, you know? So key is that this level that I've drawn, the 2,900. So it's very possible. And that is exact pattern symmetry. After that, we might create a nice handle, pulls us down another 500 points. Then we attempt to make another high. Can it be that perfect? Sure, it can. Intraday, it's going to drive us nuts. But if we keep a picture, eye on the prize, this is what's going to happen. Now, this is extremely bullish, the crossover. This is a slow-moving train telling us that things are okay. We don't have to freak out every time the futures are down 10 points when we wake up. And it's crossed over the 50 SMA on the weekly. And this is what is really exciting. Now, it's not going to be like movements up like this every week. You notice that throughout this move here, back in April, the markets did a double bottom and then crept up. And then, you know, it wasn't just like fat green candle. In this case, it's not green. It's a hollow candle, just the coloring. So higher. So this is what is exciting. Finally, since last week was the bottom. The MACD is starting to rise. So generally speaking, MACDs go positive, and that, if you count the weeks, takes us into the end of the year, go positive before they go negative again. Just the way it happened here. So 1, 2, 3, 4, 5, 6, 7. It took 8 weeks for the MACD to go positive. By that time, the market's topping. So again, you don't need to specialize in this. I mean, I look at this stuff, but I'm just giving you an idea that this is positive. As long as the MACDs are shrinking and going from -20 towards the break-even 0, it's a good thing. This is also very exciting. We got so deep oversold, it wasn't even funny. Even during the crash of April, we weren't this deep oversold on the RSI. So now, we barely went positive. This needs to keep on rising towards the 70 level, slightly above 70 right now. And then you know, gets overbought. So yeah, this is a very bullish chart. The next one we're going to look at is let's take a look at this same thing on daily. Because daily, we're definitely getting overbought. No question about it. So there's your daily. And you can clearly see we are overbought. We are actually, the Stows actually hit the upper end of the range. We got overbought. We went to 97. Wow, yesterday. So that is overbought. That's the reason why we had a pullback today. Futures are down 8 right now. So we're going through a reset right now. Everything else is fine. And this is, the MACD's just shot up from being -22. They're at +15 right now. So we just have a little bit more room to go. And we've already talked about that extensively before we get a pullback. And that pullback might even, I can't tell you what's going to happen tomorrow, but I'm just saying, You know what I'm talking about. So weekly is very positive, and the daily is the daily is showing short-term overbought conditions. All right. Here's your NYMO, the McClennan oscillator. All right. This is when I was screaming and pleading with people, guys, you gotta buy all hands down. Markets, when we made that double bottom we went lower on the market. We made a higher. We printed a higher reading on the NYMO. That was a massive positive divergence, and that's exactly what's getting played out right now. I always said, first I said if we get to 66.70, you buy hands down. Well, the market did go down here, then it tried to attempt to go, and then came the big 1,200 point drop. So by the time it went to 97, by now, guys, you got to tell yourself, the next time you see the friggin' market and the McClennan oscillator down 100, negative 100, how could you not just buy with hands down and just say, you know what, I'm buying something 2 weeks out? Sitting there twiddling your thumb and doing like quick 5-minute trades during the day when the market's giving you an opportunity to make thousands and thousands and thousands of dollars over a short period of time is complete stupidity. Especially when the readings are that deep oversold. Unless we have a global recession and going into war with China, I mean physical war, which we're not, or the Russians or whatever, you want to buy these, tactical dips. So bottom line is that right now we are here. We are very overbought. Okay, this is good. We still have a little bit of room to move. I showed you on the daily, you need the percentage K or the orange line on the stochastic to really move up towards the 80 level before you start to pull back, or very close to a sharp pullback. I'm not talking 1,000 point drop. I'm just talking about 200, 300, 400 points and to reset. So that's it. So McClennan is definitely overbought. Don't want to repeat myself. It's there. But they reset pretty fast. That's it. Not much to say. Any quick questions I can answer? One thing I'll tell you guys is just keep your trade sizes small, especially in this overbought conditions we're going through right now. And when things get, you can if you're going to do a larger size trade on a that's your IWM. I finally got into the IWM here. I'm just buying the cheap lottos because I missed out this trade. I was so busy doing the other stuff, right? The spies and all that stuff and the trade. This is huge, but this is a powerful chart. And remember, this has nothing to do with China tariffs, right? This is U.S. internal small cap sector, domestic. So 50-day moving average 162. I'll just buy the 162s. I bought next week's. I'll probably push them out more. They were so cheap. They're like 14, 15 cents. Just buying a couple. We get a big move. This gets a big move towards the 200-day moving average at 160. Those things will be a triple. Sell it. If I get close towards next week and I see this dwindling down, obviously at that point I'm going to get out of them and take whatever loss I need to take. But they're cheap lottos. 14, 15 cents. You can buy a bunch of them. What was I going to say? Yeah, so that's it, guys. Not much. Right. Yeah, go ahead.
That Copac curve indicator that you were showing.
Yes, sir.
Is that available on any of our charting packages? I didn't notice it in Thinkorswim.
No, I think Thinkorswim has it. Thinkorswim, I think, does have it. Let me see. If we go to studies.
Oh, it's in studies.
Yeah. It's edit studies, and then let me see. Let's look for Mr. Kopak. Sure, so many different indicators. Let me see here. Yeah, I don't see it here. But what if you can ask them. I know it's on Warden, TC2000. I know it's at investing.com. That was, great.
Oh, it is on investing? Well, then I'll just have a chart with that.
Yeah, like this one. Where's my Kopak? just showing it. There. So yeah, so it's free.
Yeah.
It's right there. So, and the Copoc is looking, was looking pretty damn good. Got there. So once the Copoc goes over this, the zero line, basically this is the price line. But I would say, again, I'm not a big reader of the Copoc, but if I see it up at these levels, that means things are getting a little too frothy. On the longer term charts, obviously it's a different story. But so far, let me see here. If I go,
I can give you a better indicator on that Copac curve than the crossing the zero line.
go ahead.
When the slope of the line is 0,
Mm-hmm.
there's a change in direction
That's
of the
correct.
market.
That's correct. That's a very good point, and thank you for mentioning that. That's a directional change because the Copoc itself is a directional bias
Yeah.
chart. Exactly.
Yeah.
Absolutely. You're correct.
Yeah.
And
So, and again, you could have your son calculate when the second derivative is 0.
yeah,
Change in direction.
there you go. You'll probably do it in a couple of minutes, and so will yours, sir.
Yeah.
But that's
And then one last thing, just
Yes.
because I know you want to wrap up.
no. Go ahead, sir.
But with that new car that I'm getting, I could put the the Clueless 8 bumper sticker on the back sticker of it. I'm sure people would ask me about it.
Which reminds me that for the holidays, I intend to send everyone a small gift, whatever they might be just a paper towel with Clueless 8 on it, so you can wipe all the dirt off your P&Ls. But I'm
A mega cap or
Yes.
a Trumpy bear. Have you seen the
Yeah,
Trumpy
I
bears
have seen the
advertised on
Trumpy bear
TV?
on TV. Exactly.
There
So
you
so we'll definitely have something a little Clueless on your desk. So guys, I'll run. See you guys tomorrow. Like I said, let's keep our position sizing small. Things are getting a little bit frothy, but then at the same time, it wasn't too frothy on the tech side. Things got pushed down quite a bit. But be selective. I'm looking at a bunch of stuff which have nothing to do with tech. Look at some of these ER earnings. A lot of the times I do these ER baskets. Some of them which work tend to keep on working. So now that you look at things like Etsy, you look at things like Crocs, which I don't trade normally, and the stock's been a phenomenal, I guess, mover this year. So now it's on my radar, on my trading radar. So things like that. I think retail's going to do quite fine going into the holiday season, and then of course we have special situations where you need to do what you need to do. All right. So see you guys tomorrow, and always getting your input, Mike, and we shall all connect tomorrow morning when the market opens. But again, Friday's Friday. It's weekly OPEX. Don't go crazy. There's going to be a lot of choppy movements, intraday volatility, but that should help us alleviate some of this overbought 1 hour short-term overbought conditions, which I think should hopefully be done by the end of the day. End of the day tomorrow, or maybe middle of the afternoon. Thank you. God bless, and have a great night.